What's up, everyone? My name is Ale. This is my world of stocks, and I can't wait to get today's video started because we're going to be running through every single stock that I own in my portfolio in 2023 and for the long term. By the way, I'm sorry for not posting in a while. I was actually extremely sick through New Year's and over the past week, but I'm back now. I'm starting to feel better, and I can't wait to make a ton of videos for you guys. Now, just a couple quick things to run through before we start today's video. I want to let you know the type of investor I am. I am a long-term investor that loves to buy heavier as stocks go down in price so I can get the lowest prices possible and then ride those stocks back up through a recovery. And you may actually notice some of that as we go through the stocks on today's list. Also, you should know that I currently own a ton of different stocks. There's 34 of them to be exact, which is the most stocks I've ever owned in my life. So there's just not enough time to dive deep into all of these. Instead, I'm just going to quickly run through them from largest to smallest. I'll show you what stock I own, what percent it makes up of my portfolio, what percent I'm either up or down on that position, and I'll just give you a very quick explanation as to why I own it and if I plan to buy, hold, or sell it in the future. Normally I would go way deeper into analysis, but today we're going to keep things shorter, and it's only going to be a couple of like 1 or 2 sentences explaining that stock position. Also, you might notice that I block out certain information, including the total amount of money that I have invested in these stocks, and that's just for personal reasons. I have a lot of friends and family that watch my videos, and I hate the idea of them knowing how much money I have invested in something because it can cause drama, it can cause other issues. So I hope you guys can please be understanding of that. Please don't hate me. I try to be as transparent as possible without putting my whole life out there on the internet. But if you're still with me and you want to know what stocks I own, then let's not waste any more time because I can't wait to show you guys my stocks, and let's go ahead and jump straight into this list. All right, guys, so here's my stock portfolio, and just to better organize it and make it easier to understand, I rounded off a lot of these numbers to simplify them, and I also separated the portfolio by categories, with large core being the biggest at 73% of the portfolio, which is made up by 15 of my largest core investments, basically the glue or the foundation that kind of holds my portfolio together, and each of those stocks are worth at least 2% or more. Then I have small core at 7%, which is made up of 7 stocks that I also consider to be core foundational investments, but each of these are only worth around 1% or less, so they're a lot smaller. But altogether, the entire core portion of large and small is worth around 80% of my portfolio, so that's where the majority of my money is in my stock portfolio. Then after that, I have riskier investments with foreign stocks, which I never let pass over 10% of my portfolio, and currently that's holding 4 stocks right now. And I have my speculative portion, which I also allow only less than 10% of my portfolio to it, and that's currently holding 8 stocks at the moment. All right, so diving into these, we'll start with the largest core investments first, and stock number 1 is going to be Microsoft, ticker symbol MSFT, at around 9% of my portfolio, which I'm currently up over 66% on. And by the way, I hold stocks across Robinhood, M1 Finance, and E-Trade, so I'll just show you a screenshot of whichever account currently holds the largest amount. Anyway, Microsoft is a stock that I have held as my number 1 largest investment for many years now, and I plan to continue that well into the future because of how diverse and gigantic and reliable their business is across business, cloud computing, AI, gaming, and a lot more. Right now, though, the stock is going through the largest crash that I've ever seen, so I do plan to buy more of this one this year. Next up, though, is Tesla, ticker symbol TSLA, at around 7% of my portfolio, which I'm currently up a monstrous over 660% on, despite the stock getting absolutely destroyed over the past year. But I just bought so heavily years ago when the stock was still extremely low, so I've been fortunate enough to still be up a lot on it. I may consider buying more shares this year if it continues to crash, just because I do still believe in their future, and I think they have more growth potential in areas of EVs, autonomous driving, and energy and battery storage. But I'm not in a very big rush to make any changes right now just because there are so many other stocks in the market that I do think are more attractive at the moment. Speaking of which, we have Amazon at around 6% of my portfolio, which is the first stock on the list that I am actually down on by about 5%, which I honestly never thought that I would ever be down again on Amazon stock, but after a giant crash this past year, I think it's an absolute screaming buy that I plan to load up on in the near future. Amazon is gigantically large and dominant, and yet they still manage to put up impressive growth rates. So I think when they finally shift their focus over to profits, people will wake up to what the true value is of this stock. And right now, I think it's undervalued. And number 4, though, we've got Nvidia, ticker symbol NVDA, at about the same size as Amazon, which I'm thankfully up by almost 200% on, despite the stock being very volatile and getting really destroyed this past year. But that's because I bought a giant amount years ago before it skyrocketed in popularity, and I still think that they have a ton of room to keep growing in the future, especially in developing computer chips for artificial intelligence, cloud computing, autonomous driving, smart cities, the Internet of Things, and much more. So during this crash, I may end up buying even more, but it's kind of a 50-50 kind of thing right now. Finishing off the top 5, though, is going to be our first biotech on the list with AbbVie, ticker symbol ABBV, at about 5% of my portfolio, which I'm currently up a very nice 144% on. I bought this stock really heavy after it crashed from the acquisition of Allergan, and because of that really low average price, I actually get a dividend yield of almost 9%, which is more than double what it currently yields at today's prices. So, needless to say, I am very happy with my position, and overall, I love the business, and I think they have a bright future in pharmaceuticals, but because the stock is now trading near an all-time high, I probably won't be buying any more shares at this time. I just love my dividend, and I'm just going to continue collecting it. Next up, though, we have JP Morgan Chase, ticker symbol JPM, at also about 5% of my portfolio. This is actually the only pure bank stock I own, which I'm up over 50% on. I don't personally like investing too heavily in bank stocks, but I still think it's important to have at least some exposure to them, so I simply went with what I feel is the largest and best run among them. I also love the dividend, which yields me over 4.5% on my personal cost basis, but I don't think I'll be buying any more shares at this time, as I just feel very content with what I already have. Alright guys, on to stock number 7. That's going to be Disney, ticker symbol DIS, which is also worth about 5%, and I am currently up just a little bit on it by less than 5% myself. This year though, I definitely plan to buy more Disney stock, as it is currently going through one of the largest crashes in history, and I think it's a very solid long-term bet on a world leader in entertainment content and IP. Plus, I think you'll see a lot of growth on both the top and bottom line when their streaming services Disney Plus, Hulu, and ESPN Plus all become profitable over the next year or so. Then at stock number 8, we have Pfizer at also around 5%, which I am currently up over 35% on. And I own this stock for two main reasons. Number one is because the pepperoni V-shot is literally making Pfizer the largest pharmaceutical company in the world. And number two is for the fat dividend, which yields me over 4.5%. I do plan to hold this one very long term. I may even consider buying more shares if it dips a little more. At stock number 9 though, that's going to be the food and beverage giant PepsiCo, ticker symbol PEP, at also about 5%, which I am up over 55% on, and I get to collect a very nice dividend of over 4% thanks to my lower cost basis. I also love this dividend for the giant growth history of over 5 decades, which makes it officially a dividend king, and I do plan to hold them very long term for their leadership in food and beverages with iconic brands like Pepsi, all the chips and snacks from Frito-Lay's like Doritos and Cheetos, and I also like their newer growth-oriented brands too, like Bubbly or SodaStream. However, the stock almost never crashes and is currently trading near an all-time high, so I have no plans of buying any more shares at this time. Rounding out the top 10 though is actually going to be my only ETF, which is the Vanguard High Dividend Yield ETF, ticker symbol VYM, at also around 5%, which I am up over 35% on. And of course, the main reason for owning this ETF is for the great dividend, which currently yields about 3% at today's prices, but at my personal cost basis, I actually get around 4% instead. The ETF also holds many stocks that I'm personally invested in too, so I like its overall structure, but the stock price is currently near an all-time high, so I don't think I'll be buying any more shares at this time. Breaking out of the top 10 though, stock number 11 is going to be my third largest biotech pharmaceutical stock in Merck, ticker symbol MRK, at just around 4% of my portfolio, which I am currently up over 50% on. And overall, I'm very happy with this one as they have a giant catalog and pipeline of pharmaceutical drugs that keeps their massive business steady, as well as an amazing dividend that actually yields me about 4% on my cost basis. Stock-wise though, it's currently trading at an all-time high, so I probably won't be buying any more shares this year unless something drastic happens to pull it down significantly. On to stock number 12 though, that's going to be my fourth biotech pharmaceutical stock in Bristol Myers Squibb, ticker symbol BMY, at also about 4% of my portfolio, and I'm currently up almost 30% on this one as well. Like my other biotechs, Bristol Myers is one of the largest, most solid options out there, and I'm lucky enough to collect over a 4% yield on it too. Unlike Merck though, BMY is actually going through a little dip right now, but it's not really big enough to get me too excited into buying the stock, so I'll probably wait to see if it falls a little more before I decide to add on any more additional shares. On to stock number 13 though, that's going to be Visa, ticker symbol V, which I'm up over 50% on, and currently Visa does in fact pay a dividend, but it's a very small one of just less than 1%, although my personal yield is just a little higher at 1.3%, but even that's still pretty insignificant. Instead, I mostly really own Visa just for I would say their market dominance in payments processing. I feel like anyone with a credit or checking account carries at least one Visa card in their wallet, or at least use a mobile version of that. So I feel confident investing in them long term, but I probably won't be buying any more shares at this time unless the stock falls enough to where the dividend gets higher and more attractive. At stock number 14 though, we have what I actually believe is the best overall deal in the entire market right now in Google at just about 2% of my portfolio, which I'm actually down on by about 4%. And I can tell you with absolute certainty that I will be buying a ton of this stock throughout this year, since it's one of my newest investments, one of my smallest too, that I hope to one day build into a top 5 holding. I mean, I really want to build it up into a much larger position. And that's because of how incredibly dominant their business is, with their hands in just about anything that is internet related. And right now, the stock is absurdly cheap and going through one of the largest crashes that I've ever seen in the stock. And finally, finishing off my 15 large core investments, that's going to be Verizon at also just around 2%, which I'm currently up over 10% on, and I get to collect one of the most attractive dividends in the entire market at over a 7% yield on my personal cost basis. The stock is also trading at one of the lowest prices over the past decade, and I could definitely see myself buying more shares this year for one of the leaders in the telecommunications and internet markets, as well as, of course, one of the best dividend payers out there. Alright guys, that's going to bring us now to the small core portion of my portfolio, which includes 7 stocks that are each worth around 1% or less. These are all solid stocks that I believe in long term, but that are either a little more risky or they're just newer additions to the portfolio that I'm still trying to build up. And from largest to smallest, we have stock number 1 in Meta, who is of course the parent company of Facebook and Instagram. Currently, I am surprisingly up by almost 20% on this volatile stock thanks to the heavy buying that I did as it crashed to the lowest levels. And while the stock did bounce back a little from the bottom of the $80 range up to almost $130 today, it is still gigantically down from the nearly $400 that it used to trade for. So I could actually see myself buying a little more in the near future for the giant cash flow as well as the future potential in the metaverse. However, I do also want to exercise at least some caution here with this one, as the heavy investments into the metaverse are losing them a lot of money and is also making it a little bit riskier than perhaps some other options out there. All right, guys, moving on to stock number 2, though, that's going to be Medtronic, ticker symbol MDT, which I am about break even on at the moment, and I definitely plan to buy more shares of this one this year, as the stock is currently down a lot from the top, yet has a fantastic business as the world leader in medical devices with growth opportunity in surgical robotics too. Plus, I also get a very attractive dividend of over 3.3%. At stock number 3, we have Broadcom, ticker symbol AVGO, who is a leader of processing and storage computer chips that I'm currently up on by over 14%. The stock has recently bounced back a bit, so I've paused my buying for now, but it still yields a great dividend of 3.1%, and on my cost basis, I actually get 3.7%. Stock number 4, though, is a similar situation in Walgreens Boots Alliance, ticker symbol WBA, which is one of the largest pharmaceutical retail stores out there that is also expanding into the clinics market as well. And I really purchased this one for the great valuation as well as the dividend, which were helped by the stock crashing so hard recently. But after purchasing a few shares, the stock actually bounced back a bit, leaving me up over 14 or around 14% on my position. So I probably won't be buying more of the stock at this time unless it starts crashing again. But even here, the dividend is still above 5%, while my personal shares actually yield even more at closer to 6%. So I love collecting that dividend. At stock number 5, though, we've got the iPhone giant Apple, who I purchased a small amount of recently when it was dipping, just because I wanted to get that giant, really sticky business that gets people hooked on their ecosystem of devices and services. And as of right now, I am currently up just around 3% on that position. I'm not sure if I'll be buying more this year, though, because as far as tech giants go, I actually like Google, Microsoft, and even Amazon a lot more. At stock number 6, though, we have another new investment of mine in Scott's Miracle-Gro, ticker symbol SMG, who is the world leader in consumer lawn care products like dirt, soil, and fertilizers. I picked this one up because the hard stock crash that leaves me up around 25% on my position after a recent bounce back, and I'm also collecting a super nice dividend above 6%. I think I'll pause my buying for now, though, considering how much I'm already up on it with that great dividend. And finally, to finish off the small core segment, I have 3M at stock number 7, which I am up just about 4% on. And this is, of course, the giant company behind 3M products like Scotch Tape and Post-it Notes. And back in the day when I first started buying it, I actually felt that it was a very reliable long-term dividend king to invest in, but more recently, they've been dealing with all kinds of lawsuits that are making their future more uncertain. So while the dividend is still really good at close to 5% with over 6 decades of growth, I just don't plan to buy any more shares at this time until all the lawsuit mess gets resolved. Alright guys, that's going to bring us now to the international portion of my portfolio, which makes up less than 10% of it, and it currently holds 4 stocks. Now, just a quick heads up, I do not currently have this portion filled up to 10%, that's just kind of the cap that I always limit myself to, but instead I only have less than 8% of it filled at the moment, but that leaves me more room for buying, which I like to have. Also, you're going to notice that all 4 stocks are Chinese stocks, and that's just because China is where I really see the most international opportunity at the moment. But starting with stock number 1, that's going to be the Chinese e-commerce leader in Alibaba, ticker symbol BABA, at around 3% of my portfolio. Of course, Alibaba is often considered the Chinese version of Amazon, and I think they have a ton of future potential, so I've been buying quite heavy at the lowest prices this year, which dropped to as little as the $50 range before rebounding back to 100 today. As such, I am currently up over 50% on my position, and I probably won't be buying much more at this time unless it dips back down. But I do think that it's still a solid choice for really anyone that is not already in it. At stock number 2, though, that's going to be Tencent, ticker symbol TCEHY, who is a Chinese leader in social media, gaming, and even cloud computing and artificial intelligence, and they have a growing global presence as well. Like Alibaba, the stock has also been crashing heavily, but has recently rebounded from the bottom, leaving my position also up by over 50%. And at this time, I have the same exact thoughts on Tencent as I do on Alibaba. For stock number 3, practically the same story here with Baidu, ticker symbol BIDU, who is often referred to as the Chinese version of Google, with a giant presence in search, digital advertising, cloud computing, AI, and even autonomous driving. Just like the others, Baidu stock has gone through a similar pattern, and I am currently up on my position by a little over 50% as well. And finally, at stock number 4, this is actually my newest purchase in NIO, ticker symbol NIO, who has often been referred to as the sort of Chinese version of Tesla, although they're really just a tiny startup still. But I think they have a lot of future potential if they're able to execute, and at the moment, I am only up around 5% on my position and will likely buy more shares if it falls below my cost basis throughout this year. But it's of course much riskier than the others on the list, so I plan to keep it well below 1% of my overall portfolio for now. Speaking of below 1%, though, that leaves us now with the final portion of my portfolio in what are all of my speculative stocks, which I limit as a whole to less than 10% of my portfolio. And at the moment, each of these stocks are only worth around 1% or maybe less, as most of them are some of the newest additions to my portfolio that I'm still trying to build up larger over time, and especially as they grow their profitability and become less risky. Going from largest to smallest though, stock number 1 is going to be Palantir, ticker symbol PLTR, which is a stock that I am admittedly in love with, as they have a growing presence in AI and data management and analysis. And because the stock has been performing so poorly, I am still slightly negative on my position, so I definitely plan to buy more of it this year. At stock number 2, we have Teladoc Health, ticker symbol TDOC, which is a leader in telemedicine, which I think is going to be a gigantic market in the future. But for now, the stock has been crashing hard coming off of the giant growth that they saw during the pandemic, leaving my position still a little negative at the moment, but I plan to continue buying heavier as it falls. At stock number 3, we have Duolingo, ticker symbol DUOL, which I'm actually down on by over 12%, as the stock has just continued to crash all year long. This is a very exciting business though, as they teach languages through a fun and interactive mobile app, which they're also building upon with math and science curriculum too. So I think there's a lot of future potential there, and I definitely plan to buy more of the stock this year. At stock number 4, we also have SoFi, ticker symbol SOFI, which is similar to Robinhood in that you can buy and sell stocks, but more importantly, their business revolves around lending, refinancing, and other financial services that can all be used through their mobile application. Currently, the stock has crashed heavily after recently IPOing, but thankfully, I'm only slightly negative on my position as I only recently started investing in the company, and yes, I do plan to buy more of it this year. At stock number 5, we also have Endeavor, ticker symbol EDR, which I only own for one simple reason, and that's that they are the parent company to the mixed martial arts giant, the UFC. I'm personally up only 3% on my position, but at the moment, the stock is still down a large amount from the top, so I may buy more shares in the future, but to be honest, I never really wanted a large position in this one to begin with, so I might just stay on the sidelines or just kind of hold what I've got for now, but we'll see. At stock number 6, we have Upstart, ticker symbol UPST, which is aiming to disrupt the financial lending markets by using AI to attract more customers at better rates. After an initial surge following the IPO, though, the stock has proceeded to crash, and that's why I'm now starting to buy the stock myself. I'm only slightly negative on it, and I do plan to buy more shares in the future. Stock number 7, though, is going to be Robinhood, ticker symbol HOOD, which is, of course, famous for being a very popular investing app, especially among younger generations. And initially, I really liked Robinhood because I felt they had potential of becoming a world leader in investing, but over time, I realized that they are super volatile and a bit risky, as their growth has slowed way down coming off of the pandemic. I'm still down over 2% on my position, but I'm not really planning to buy more at this time. It's just kind of a hold for me at the moment. And finally, my smallest position here is in Activision Blizzard, ticker symbol ATVI, which is the gaming giant that Microsoft is trying to acquire, although they are still facing heavy backlash and resistance from regulators. But that's really the only reason why I bought it, as a very speculative gamble on the acquisition actually getting approved. At the moment, I am just slightly negative on my position, but I do not plan to buy any more shares at this time. And in case you're wondering, my average cost is about $77, while the acquisition price would be significantly higher at $95. But there you have it, guys. These are all the stocks that I am currently invested in 2023 and that I look to own for the long term. I hope you guys enjoyed the video. Let me know if you own any of these stocks yourselves. Do you consider any of these stocks a great option? Do you disagree with any of my ideas here, anything that I'm doing? Let me know down in the comment section and I'll respond to your comments. I hope you're all doing well. I hope you're all having a great start to the year, and I will catch you in the next video. Thank you for all your support. I'll see you next time. Take care, everybody. Bye-bye.